Even with billions to spare, nobody enjoys losing money. The possibility of a bear market, which is defined as an extended decline in stock values of at least 20% over 2 months or longer, is what causes even the world's wealthiest investors to lose sleep at night. In order to mitigate this risk, billionaires worldwide like Ray Dalio employ a range of techniques and approaches to safeguard their fortune, such as assembling their portfolios with particular asset allocations that can mitigate the impact of a protracted market decline. Let's see some top investment tips for the 2024 recession from billionaire investor Ray Dalio. Over 47 years, Ray Dalio, a global macro investor for over 50 years, built Bridgewater Associates from his two-bedroom apartment in New York City. As the largest hedge fund globally, it is now ranked as the 5th most significant private company in the United States by Fortune magazine. Uncorrelated assets are, despite their technical name, just investments that do not move up or down in tandem with the other asset classes in the portfolio. When market sentiment shifts, a small allocation to these uncorrelated assets might help preserve a portfolio's value. Which asset classes are appropriate for this kind of use? Although alternatives to standard equities and bonds such as cash, real estate, and commodities might add to a more diversified portfolio, gold is widely regarded as the undisputed king of uncorrelated assets. Due to its historical volatility, the yellow metal's price frequently rises even during weak markets. The price of gold typically does not fluctuate in tandem with the overall stock market. The following are a few of the factors that lead billionaires to allocate funds in gold. For thousands of years, gold has served as a store of wealth. A portfolio's volatility can be reduced by gold. In certain situations, gold can serve as a hedge against inflation. When the market goes awry, investors traditionally turn to gold as a haven asset. Along with earlier proponents like Ray Dalio, David Einhorn, John Paulson, and John Tudor Jones II, a new billionaire joined the gold bandwagon to start 2019. The most recent member of the group is real estate investment trust pioneer Sam Zell. When he first purchased gold in January, he did so on the grounds that it was a good hedge and that the supply is shrinking due to a decline in new mining discoveries. It will be interesting to see how many more of the world's elite investors join the bandwagon now that market volatility is back in the picture. The Fed's relentless rate hikes severely cloud the stock market. Ray Dalio, the creator of Bridgewater Associates, the largest hedge fund in the world, is one of the experts raising the alarm. In a June LinkedIn post, Dalio issued a warning that the Fed's tightening policies may cause stagflation, an economic situation in which there is high inflation, but not the strong economic growth and employment that typically accompany it. Over time, the Fed will probably map out a moderate path that results in stagflation. Additionally, Greg Jensen, co-chief investment officer at Bridgewater, stated to Bloomberg earlier this week that the Fed's aggressive position hasn't been fully priced in. Let's assume asset markets decline at a rate of roughly 20 to 25% overall, he forecasts. Here are some of the largest assets at Dalio's hedge fund in case you're unsure of what to do in light of this dire forecast. If you're considering hiding your excess cash beneath a mattress, reconsider. In a recent CNBC interview, Ray Dalio, the founder of Bridgewater Associates, the largest hedge fund in the world, stated, "Cash is not a safe place to invest. It will be taxed by inflation." The U.S. Consumer Price Index increased by 8.5% in July 2022 compared to the previous year, and it is currently close to 40-year highs. However, other analysts think that the number, which is decades high, is still being underreported. In either case, the purchasing power of consumers is significantly reduced. Positive news? Investors have a plethora of new options at their disposal to combat inflation these days. Here are 5 alternatives that you might not have thought of. One thing is wine. Bottles of wine get harder to find and possibly more valuable with age. You can invest in wine by buying individual bottles, but you'll need a suitable storage space for them. Tens of thousands of dollars are frequently spent on residential wine cellars. The integrity of the bottle may be jeopardized if it's not kept at the proper humidity or temperature. This is the reason why some investors decide to use a platform for wine investing. Through its contacts, the organization would purchase great wine at costs lower than retail, and they would take care of the storage for you. You would also have loss and breakage insurance for your bottles. Additionally, you may always order wine to be transported to you for enjoyment because you are the true owners of the bottles. Another investment option is fine arts. It is understandable why artwork frequently achieves all-time high prices at auctions. The finest pieces are in short supply, and many collectors and museums have previously acquired paintings. As a matter of fact, art could serve as more than just an inflation hedge. As demonstrated by the Citi Global Art Market chart, over the last 25 years, contemporary artwork has outperformed the S&P 500 by a dominant 174%. Since the artwork is a real physical asset that has little relationship to the financial market, it's becoming a popular way to diversify investments. In 2021, 85% of wealth managers felt that art ought to be a part of a wealth management service, according to Dalio's most recent Art and Finance report. Only the very wealthy indeed had the opportunity to purchase fine art from artists like Banksy and Andy Warhol in the past. However, like Jeff Bezos and Peggy Guggenheim, you too may buy great artwork with a new platform. According to Ray Dalio, investors should keep these things in today's volatile market. The first tip from Dalio for capital allocation for investors is to concentrate on the appropriate geographic markets. However, which regions are the best? Which parts of the planet are hot and which aren't at the moment are very obvious. The Vanguard S&P 500 ETF owns the 500 biggest American corporation stocks. The Vanguard FTSE Europe ETF holds European equities. The equities of businesses with headquarters in China, India, Japan, and Latin America are the focus of 4 distinct iShares ETFs. Investors have made the greatest overall gains in the Western Hemisphere in 2023. Stocks in the United States and Latin America have returned significantly more than stocks in the majority of other regions of the world. On the other hand, this year has seen an equally spectacular recovery for Japanese stocks. Investors shouldn't dismiss the evident momentum in the Americas and Japan, even though there's no assurance that these trends will last. Sometimes people refer to diversification as the only free lunch in investing. When he made his remarks at the Milken Institute Asia Summit last week, Dalio didn't quite go that far. He does concur, though, that investors ought to create a diverse portfolio. A well-diversified portfolio will contain a variety of asset classes. In addition, the equities should be diversified by market cap, industry, and region, while keeping Dalio's first piece of advice in mind. Dalio concurs that investors must keep an eye out for market upheavals. He believes that disruptive technologies in particular can be very important in generating future returns. Where is Bridgewater Associates, Dalio's hedge fund, most heavily invested? Its best holdings include a number of blue-chip stocks that you may not consider disruptive. Nonetheless, Bridgewater owns sizable shares in Intuitive Surgical, Meta Platforms, and Alphabet, the parent company of Google. Following the global success of OpenAI's ChatGPT generative AI program, several investors appeared to write Alphabet off. However, the business bounced back with its own AI developments and is currently developing a generative AI model that is purportedly more potent than ChatGPT. In the fields of quantum computing and self-driving car technologies, Alphabet is also a leading innovator. Dalio expands on his previous suggestion in his fourth one. According to him, the best places for investors to put their money are in asset classes that are developing new technology. Asset classes are categorized into 4 main categories: cash, stock, fixed income, and alternative investments. Which of these meets Dalio's goal is quite obvious. The only companies that truly create new disruptive technology are those that are represented by stocks. Not unexpectedly, the majority of funds in Dalio's hedge fund are allocated to stocks. But last week he said to the crowd, "Cash is good right now, I think temporarily." But wait, what then should investors in Dalio's opinion stay away from? Bonds. In response to a question concerning his investing strategy in the current climate, he said, "I don't want to own debt, bonds and those kinds of things." In the not-too-distant future, though, wouldn't falling interest rates lead to rising bond prices? Sure, but Dalio is viewing the world more broadly, particularly when it comes to the growing problem of global debt. He said, "I believe that bonds longer term are not a good investment." That's all for now. For more videos like this, subscribe to our channel. Thanks for watching and see you in the next video.